Money on my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Rated Narrow, and we are back at it again with another episode of that. And we're gonna jump right into it, but before we get to that, let's get the housekeeping done. I got 3 asks of you. First and foremost, I ask that you like the video. It helps me with the algorithm. Even if you hate the video, dislike the video. That's fine. That also helps. Feedback, some feedback. Secondly, don't forget to subscribe, especially if you've been here more than twice. And while subscribing, hit that bell notification, turn all on. I promise not to flood your feed. And yeah, so we've got that going for us as well. Last but not least, share the video. That's always a welcome thing. And then as a bonus, if you guys want to tap in with me down in the comments, I do check my comments when I do my uploads, and I do reply to all comments. So as the video is going through, if you hit the timestamp to let me know exactly what you're talking about or clearly define your questions, I do answer questions. I do have dialogue back and forth down in the comments. I do check my comments. I do reply to my comments. And let's go ahead and jump into it. We're going to have a conversation today because I learned something. And it's not often that you get to learn something the hard way on accident. Now, this is one of the things that I never thought of because since I've been in the high yield space, I've always had things that had access to a certain level of margin. So I've had with my primary portfolio, and that's the portfolio that we're going to be speaking on today, I've always had a good amount of margin accessibility in that portfolio. Well, I did a pretty large sell-off, and whenever you sell off, it clears my margin out, and then I have the decision on if I want to keep the margin cleared and run low margin, which I've done twice. But I got stopped out on Ulti, which is both. I mean, actually, there's no both to it. It's just what it is. I have a stop loss. I had an amount that I was willing to go down the rabbit hole with Ulti, and we hit that metric, and I sold. I sold a little bit ahead of the metric before we actually hit it because I was going to give myself 5% in total loss on Ulti specifically. And when it got to about 3.6%, flagged for me, and I went ahead and made the decision, sold it off because I didn't want to take that other 1 point whatever percent hit, and reallocated the funds. So we swapped out of Ulti, and you'll see this on the monthly update because I'm sure there's going to be some other ones before this month is over. But we swapped out of Ulti since we got stopped out there and moved it into TSYY, TSLW, and wpay. Well, it turns out that everything that I did the trade, and I don't know if it's while it's waiting for all the trades to settle or whatever, but my margin went to 0 immediately. So now we're running cash on cash in the primary portfolio. And I looked at it because I was trying to move some money around to see what I was doing, because I was like, and it wouldn't let me buy the additional stocks because I was running a margin of about $2,000 at the time. It was just under. It was actually, it was just under it was just under $2,000. I was at $2,000 margin. So I had some overbuying after my cash balance went to 0, and it wouldn't let me do it. So I was like, oh, maybe the next day it will. And then it wouldn't let me do it the next day. And then I'm looking, I'm like, yo, these numbers are way less than what I had access to before. So I'm assuming that because of the large purchases there, the large sell-off and the large purchases, I'm either got to wait a few more days, which is what I think it is, because in the margin section for when it's allowing me to buy and sell stuff, it has some margin there. It still has a pool of money there that I'm supposed to have access to. But throughout the course of last week, after I triggered my stop loss for Ulti, I did not have access to it. And then I was like, I always plan for the worst, hope for the best. Hoping for the best is they give me my margin, a little portion of that back, because I've got darn near $40,000 in the account. And I'm like, I understand volatility, but like y'all should be able to give me 10. I should be able to have 10 easily. And I'm only using 2 to 3 of it, 5 at max. So like I think they're gonna give me something after the dust settles. But as it sits right now, I had to come up with another strategy because obviously we've taken out a rather large loan and we're running out of that portfolio to manage the loan and manage now our minimum balances on our credit cards and obviously actively pay down some of these credit cards. So I was looking at it and I was like, oh, well, we could just crank the Cash App flywheel faster and run out of that pool because I should be income wise at almost $1,000 a week. And then when you factor in the checks, my paychecks, it should be a little bit more. So at least every 2 weeks, I should have access to that $2,000 that we've been disseminating through with a cash on cash basis. So I'm looking. So the pivot that I made was we went into protection mode. Like obviously you got to scramble at that point. You're like, oh, I don't have access to X amount of margin anymore, but I do because I still have my Robinhood portfolio, and that portfolio, while I only have the one over there, the one has access to a good amount of margin. I also don't have to pay interest on the first 1,000 of it. So we're looking over at that portfolio to start doing some stuff. But the other thing that I came to the conclusion of, I was like, even if I do get my margin back, I'm like, maybe I need to run it tight right now, especially during this time of volatility. And realistically, only be, especially since I'm over investing at the moment, just not have the margin on there until we get through the month of November and we get all of this loan money deployed into the market. So we're going to be hitting that Cash App flywheel even faster now. I'm also making some adjustments to get a little bit more income off that Cash App flywheel, which is going to be pretty interesting as well. I don't know whether we'll tap it all the way out or not, but we could. It depends on what the income is looking like once we get, I'd say, through this next cash infusion should give us an idea of about where we're going to be at. Because then after that, I'll have one more cash infusion. And it might be a little bit less because I might be doing a little bit of ability to move money since we're going cash on cash with the margin account instead of using margin out of that primary account. So I might leave a float that's a little bit higher than what I normally have my bank account set at, which is about $50. I have no money in the bank, all money in the brokerage, all money working at all times. It's either in the brokerage, cold storage, hot storage. It's in a wallet, in crypto, in stocks, in ETFs. It's always in something. It's never in the bank. So if somebody looked at my bank account, I am a brokey. I am a brokey anyway at this juncture. Like, I'm just a brokey for different reasons. Like, people are living paycheck to paycheck because they can't afford their bills and they're living outside their means. I live paycheck to paycheck because I invest all my money. Just different levels. I ain't got it. But as we're moving forward, we're going to test this for the rest of the month because I think we just redeployed funds and we should be rolling through a non-payday week. So I think in another 2 weeks, we'll get our second cash infusion. And obviously with the Cash App flywheels, the predominant thing that we're focused on with that is ensuring that we hit, the first and foremost priority is ensuring that we hit our goal on having our payment set up so that way we have that auto deduct payment. It's about $1,700 and having that set and ready to go. So I just moved 1,700 over. It sits there. They pluck it up on the day. I'll put it in there, transfer it over in cash from the day before. So I do have a little bit of money that sits throughout the month in my deal. But I'm using the Cash App flywheel first and foremost to handle that. And then the distributions that we're getting, just focus, since it's cash on cash, focusing 100% on getting that money back into paying off the Cash App flywheel and then just respinning it over and over and over again. And I think that we're almost to the point to where no matter what, like it might not even hit my check anymore, my stipend that I have come out of my paycheck, because we're spinning it so hard now that like if all we're doing is taking all the distributions, if I'm making $3,000 a month, I should be able to ratchet that thing almost 3 times. And then at a certain point, we'll start being able to pull our investment money out of that as well. Right now, even the check money, which is going in there, like the allocation that goes in there from my paycheck, setting stuff up slightly on autopilot, that's coming right back out now because we're over invested. So I can't invest those funds either. So that's an additional funding that goes towards it as well on top of the distribution. So I'm hoping that what we get to is almost being able to churn that thing once a week would be nice. And, you know, as we work our way through it, we pay down stuff, see if it pays down faster than trying to let it cycle through in the margin account. I mean, it'll definitely be, I think it'll be a less interest because Cash App is a flat 5%. It's 10% for me because I take 5%, put it into the in-home banking pool of money. But it also, since it's that flat 5%, obviously the margin account's always holding money. So I still have it on my list to call Charles Schwab and get that lowered. But I think we're going to be looking at utilizing cheap and free money. And so we're going to start moving some stuff around, making some plays over in the Robinhood portfolio. And that first $1,000 of margin is about to start getting deployed into the ecosystem as well. And yeah, and then we'll pay that back and we'll charge 10%, and that's just going to be 10% into the portfolio for the use of that. We're gonna start cranking some stuff, but you got to check the status of your positions with high yield. That was the lesson that was learned, because I had the foundation of my portfolio obviously was Ulti, so that was like 53% of the portfolio at the time, and that quickly turned into a little bit of a mess because you took out the thing that the majority of the margin was on. And I guess we'll see, because like I'm still waiting. You know, I kind of, all changes within my brokerage account, since I'm not a TradFi guy. This isn't an account that I have like 10,000 hours of experience with. I have experience with cold storage wallets, hot storage wallets, crypto, DeFi wallets, that stuff. So maybe I'm overreacting, but I pivot based on what's going on then at the moment. So I'm just making the assumption that we're not using margin. A random applause. I like it. We're not using margin out of the primary portfolio for the time being. So I just went ahead and instead of sitting there and wondering why, I'm like, cool, if I don't have margin, that's fine. We're generating enough income that technically I don't need it. Also, if I'm going to be paying interest, I could be paying that to myself to build up my lifestyle portfolio. Because if I pay back 10% and I use that first 1,000 at 0%, now the whole 10% comes to me. So I think we're going to start shifting the utilization of our portfolios in that regard. So the margin will be sitting over in my Robinhood portfolio versus sitting in my primary income portfolio, because the interest is cheaper. So if I decide to run a $2,000 margin, I'll only have to pay 5% on $1,000 of it, which isn't that bad in comparison to what I'm paying for keeping that float over in my Charles Schwab account. Also, I can send the money over there and pay it that way and just pull the money that needs to go over there to pay stuff off out of that account. And then my Charles Schwab account is free and clear. And actually, the margin in that account, when it returns, becomes an actual legitimate emergency fund. Secondly, I get to keep that interest. So it seems to be more efficient. not, you know, I always say that like the learning opportunities are when things don't go the way that you plan. And I didn't know that that's how that worked. I come from TradFi. If you move money, it's just money that's moved. Like there's nothing really changes. It's like, hey, if you have this amount in here and we were giving you access to this amount, it might change based on the collateral that you're using, but it's also clearly defined. Like it's easy to find like what your collateral margin is in DeFi. There's like, hey, we're giving you X amount loan to value on this, X amount loan to value on this. It's 50% for Bitcoin generally, maybe a little bit less for Ethereum. And if there's something that lets you, there's stuff that lets you leverage everything. But as you get to less popular, lower market cap coins, the loan to value gets lower. And you know what it is. It's clearly defined. Like with TradFi, I don't know. It's just whatever they give me, and they adjust it as they see fit. And it's like magic in the background. It's not fully transparent. There's no notifications on this. It's just like, hey, like we increased your margin because we feel better about this position. Hey, we decreased your margin because we feel a certain way about this. And that's fine. But as opposed to like doing a bazillion digging, for me personally, I'm like, okay, cool. We're making enough income now to where I can just adjust around it. Like I have enough resources within my ecosystem that I've set up for myself to just go ahead and pivot and be like, I'm not gonna call and argue with you about this. Like I might not even call to negotiate down my margin over in Charles Schwab because it's going to become an emergency fund at that point. And since it's going to be an emergency fund, I'm not going to really worry about arguing or trying to get them to lower the interest on it because I shouldn't be tapping it unless it's an emergency. Actually, it's going to be two things. It's going to be an emergency / home improvement fund once it comes back. Once it comes back and we see what we're working with, that's when we're going to start looking at getting some of these deals started like one project at a time, like one thing at a time, which will slow down the Cash App flywheel, which will slow down the margin repayment over in the Robinhood account a little bit, but I'll be able to do like one thing at a time and then just let it pay itself off. And then one more thing and then let it pay itself off. And then in the meantime, all the excess and whatnot will go over into the pay down of the Robinhood deal, which we actually have a little bit of margin sitting over there. So we're going to have to start letting that trickle itself down so that way we can knock that out real quick as well. Yeah, so that's what we're doing. I feel kind of good about it. I feel like it forced me to optimize, and you should always take those opportunities to optimize versus panic. The other moral of the story, follow your stop losses. Like if you're like, I understand that people get sunk loss cost really fast and high yield. I do not. I'm like, hey, I'll let this ride down 5%. And then sometimes before 5%, depending on what position it is, because blocks, which is another cash reserve position, is below 5%. Set to drip. I'm like, cool, we're getting the extra shares. We're doing a buy on Monday. We're going to get some extra shares with the allocation that's going in with that. And well, we did a buy on Monday. I guess you're getting this after it's happened. But we I don't have an emotional attachment to any of my investments, really, outside of Bitcoin. There's nothing that I've got that I'm riding to zero. Like I'll ride it to a certain point, and once it gets to that point where I'm like, hey, we're cutting bait on this, that's the point. Like I'm not playing games. Like I'm trying to protect the nugget of capital that I have in there as I'm adding to it as best as possible. And like, yes, you're going to take hits, but like also the income that's coming in, what are you doing with that? How are you disseminating that into your ecosystem? So for me, it's cash reserve positions. That's easy. The moves that we make at the beginning of the month, you know, like buying long-term holds, buying Bitcoin, those are all things that for me, I'm like, yeah, this is what we're doing. This is how we're working this out. Putting more responsibility on the income that's coming in, like managing the minimum payments while we're paying down this debt. That's a big deal. And yeah, you know, that's kind of where I'm sitting with it. And you know, when you accidentally have a little hiccup, you go through, you replan, you pivot, and you optimize. Because I'm just like, well, as I'm going through my margin and stuff, now that I don't have it over there, I'm like, cool, I've got enough cash coming out of here to like chunk at this every week. And looking at the inefficient, because like I'm only using about $500 of the margin over in Robinhood, and I've let it float there to like kind of get position started. But more often than not, I'm just using the distributions that are coming in anyway to do positions, and I'm not all the way ratcheted up to $1,000 over there. So having all of that interest come back to me instead of paying Charles Schwab or Robinhood for that matter makes sense. If I had $2,000 over there, having to pay less in margin and just paying it from my other portfolio over in Charles Schwab makes sense. I just transfer the cash to my bank account, move it over, put it in Robinhood, call it a day, pay the margin down, rinse and redeploy, just like what I was doing in Charles Schwab. And then I can use my distributions over there and the income that's coming into that portfolio to continue growing the positions. So, these are I just like to go through because like not everything goes perfect. And apparently, all the gurus, they give the highlight reels. They show you from an angle where they're never making mistakes. And this doesn't necessarily fall under a mistake for me. Like following your stop losses and getting stopped out of a position isn't a mistake. The mistake was the lack of understanding of how margin works, because I still don't know. I'm just like, cool, you tell me how much I can have and I'm going to play within that rule set and whatever, I'll make it work. Because my end goal isn't to be in TradFi anyway. But as you go through, these things happen. Now, if I was making less income, this could be problematic if I was actually needing that margin. But I don't. And so that's the reason, like margin, if you're using it as a crutch, that can be a dangerous game, especially if you're actually following your stop losses, actively managing your portfolio, and you don't have the full understanding, like I don't, of exactly how margin works or how much margin they're going to give you on a position or how long it takes for them to turn the margin back on when you're moving $16,000 around, $10,000 around. And yeah, that's what I got for today. So on your way out, do not forget, if you haven't done already, to do the 3 requests: the like, share, and subscribe. Help me out. We're floating around 400 subs. We're trying to get to 500 by the end of the year. And then like the next stretch is going to be to get to 1,000. But I would like my first stretch, obviously, to get to 500. We'll get there when we get there, because we're going to do what we do over here. This channel is more for documentation purposes than income purposes, obviously, because I've been doing this for a year and I'm not getting paid for it. So it's leaving the breadcrumbs for those coming behind me. And yeah, this has been another great bag talk. Till next week, it's your boy Reckless Ray Dinero, and I'm out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.